Good morning and welcome to Jackrabbit Trader, where we teach you how to stop predicting and start reacting. My name is Steve, and in this video we're going to take a look at the markets and a few stocks to watch for Saturday, August 19th, 2017. We didn't do a separate video last week, but hopefully you guys got a lot out of that. We're also going to be having another Jackrabbit Club video later on today, and we're going to be exiting a lot of stuff. Based on our rules and our process here, with the idea that maybe this market is starting to roll over. All right, so we've set our stops in place. Those stops are getting hit, so we're either going to take some of our position off, all of our position off, depending on where it is. But if you want to see how to manage that, you can head over to jackrabbittrader.com. Either sign up on the top, and you'll get the latest video sent to you. With that said, we are continuing to outperform the market. You can see we're up 14.95% compared to the market, which I think is about 8. And we continue to just follow through our process and close out some trades, some for losers, some for winners. I actually have to add a closed trade in Wynn Resorts that we closed last week into this list, and then there's going to be another few from this week that we'll add here too. So again, you want to see how we do it based on a simple process, just managing these trades. You can do that again at jackrabbittrader.com. All right, so SPY. All right, so basically last week we had some selling. This week it looked like a typical reversal where we're going to come back, test the support area, and then V-shaped reversal back up. That was good until I think about Wednesday or Thursday, and then the bottom really just fell out of the market. I think again Wednesday or Thursday we were down like 40 points on the futures, which is a substantial move. And you can see now we're putting a second selling candle in. All right, you can see two big red candles. We haven't had that for some time now. Right, go back in the SPY, and the last time we really had two big red candles. We had two here, we had two here. So maybe it does lead to a bounce. Maybe that's the exhaustion move for the sellers. But we don't know. This market has been propped up for some time. We're pretty extended, in my opinion, from this lower trend line, which I think is more appropriate. So who knows? This market could come all the way back to 238. We're at 242, maybe another 40 points or so on the SPX. But we're just going to go through, manage our process, and see what happens. The Qs, all right, similar situation where we just consolidated, now starting to roll back over, back into that consolidation that we thought we were breaking out from back here on the 17th. All right, the diamonds, again, haven't had these two big red bars for some time. You could see that it's just been a grind higher, and really it's been almost two big red bars can almost take you back into June of last year. All right, so again, just something to be aware of, understanding what's going on in the market, and understanding when it's time to put risk on, and understanding when it's time to take risk off. And to me right now, this is a time to take risk off. I could be completely wrong, but the price action and what's happening is just kind of dictating what we're doing, and I will be taking risk off. I have 3 stocks to watch that we'll go over if you guys want to put some risk on. Personally, I'm not. I think cash is better than trying to hedge or get into the safer plays in the market, like some of the staples that everybody talks about. But that's your decision. And last but not least, IWM. We had a big topping tail here, followed through, confirmed that topping tail, and then sure enough, we've just continued to sell off, not even holding that 139 area, which was upper consolidation. Next support area would be somewhere probably in the 132, 133 area. Should see a bounce there, but again, never know. All right, so that's the markets. Let's take a quick look at some of the sectors. We'll sort them by which ones outperformed this past week, and outperforming the SPY. First one is the XLU. All right, you can see that that's actually in somewhat of a breakout pattern. Actually, let's put the XLU. I don't have one. XLU potentially signaling a breakout. All right, that previous low would be right around 51.50. Small breakout. So again, you know, if you're looking for maybe a hedge or a flight to safety, maybe some of the money rotating out of the higher tech names and higher beta names, rotating into the XLU, XLB, right? A small bounce in the market. XLP, small bounce. XLK looks like it's rolling over. The XLF looks like it's rolling over, maybe hitting some resistance up here around the 25-30 area. All right, XLV broken. Okay, had this consolidation, broke down. The XLI breaking down. All right, so think about our commentary or our review of these sectors 2-3 weeks ago when we thought we were breaking out, right? We were like, oh, breaking out, this market could run higher. Well, sure enough, that's not happening. Just breaking down across the board, and you know, not looking good. I mean, personally, that's my opinion. Based on what I'm seeing here, I would definitely be in risk management mode, really, than looking to push the envelope here. All right, you can see that's the XLY potentially breaking down after hitting those bottoming tails. XLE, again, thought it was breaking out, now breaking down. Again, if you're looking to short, that's a perfect short setup right there for you. Maybe target somewhere around that 59 area. All right, but you know, again, just not looking good. All right, so the three that I looked at that we potentially, if you were interested in, could get into. First, Estee Lauder. This is one we talked about, I think, back on the week of the 24th. Then I don't know if it was last week or this week they had earnings, but sure enough, we had talked about it right around 99, trading 105. So, you know, still a move higher, maybe some extended move at this point that, you know, probably gets sold off in the next few weeks. But, you know, again, a breakout nonetheless. PG, okay, PG we have right through here. Okay, so you have your high, find your low, and then here you are breaking out. So trend line is in place, right? 1, 2, 3, 4 touches of that trend line. All right, we go to the last swing low or the low of that consolidation. Let's call it 86, where we have a touch here, a multiple touches here, and that would be your stop. So a breakout right around 92.50, stop around 86 would be that trade. One other thing to keep in mind there, if you go back to the highs, resistance could be right around that 94 level. And last but not least, XEL, Xcel Energy. Again, find the high, find the low, trend line is in place, and your stop level would be that low. Again, you can use the wick, which would be the wick of this candle right around 45.20. I like to use the closes of the body, so right around 45.70. All right, so again, that breakout 49, a stop right around 45.70, give or take a few pennies here or there. So again, if you're looking for some action in the market, you know, we have 2 consumer staple names and 1 utility. All 3 are typically what they consider to be flights to safety. If the market turns around, these could easily be sold off. All right, so that's where we're at with the markets and some of the stocks to watch. Again, if you're interested in getting or seeing how we're going to manage our trades this week, which there's going to be a lot of management, you can head on over to jackrabbittrader.com, sign up for the email list, and you'll get access to the current video. All right, have a great weekend, and we'll see you next week. Take care.